This is Eric Muathe with Muathe.com. Let's take a look at another wave cancellation example. This time we're taking a look at the UYG daily chart, and I have two wave cancellations here for you. The first one is on the sell side. There was a wedge formed here late 2010, early 2011, and you see that there is a wave cancellation there. That bottom movement cancels out with that top movement there, so there's a wave cancellation. Once the stock breaks that out of that wedge on the downside here, you see a big sell-off that began with the stock moving from 75 all the way to the lower 30s. So big move if you ignored that wedge sell point. Down the road, about a year and a half down the road, another wave cancellation wedge is formed. You see there's a wedge here, and you can clearly see the wave cancellation there, which means that the line can pass through that and connect to other points on the wedge. And once there was a breakout there, which also coincides with the price breakout out of this wedge, the stock was giving investors a buy signal. And here is the after chart. So after the wave cancellation here, after that wave cancellation wedge, which is what we are studying, we had a breakout there, which corresponds to that price wedge breakout there, and the ETF has seen a big move since then. Now, as an added learning example on this chart, there's something I wanted to just touch on here, and it is the fact that from the sell wedge, which is this wedge here, once we broke down, this area now with the red line was established as a sell point in the stock. You have to understand that this becomes a sell point, this area here, which is shown by the red line. And this example clearly shows that every time we hit that level, which is there, corresponds with that high there, we made a double top touching that red line there, which corresponds with that high there, and then another area where we touch that red line there, and the stock did pull back. So understanding that, and we are going to cover this in subsequent videos, but this is absolutely important to understand how this works. So you can see now with this wedge breakout down the road here in early 2012, this breakout here, the only way this breakout works is if it moves above the red line. You have to understand that, otherwise it's a false breakout. So let's take a look at what happened after the fact. And you see, yes, after we moved out of this wedge here, early 2012, the stock did subsequently move above the red line, which is something it had not done previously. So that was a legitimate buy signal. And just before I end the video, notice also that in April 2012, which is here, the stock did move back below the red line, which corresponds with that high there, and there was a serious pullback. What I'm trying to say here is investors can really understand how to use this simple RSI reading methods, and they can save themselves a lot of trouble. This is Eric Muathe with Muathe.com. We shall continue on with this and other aspects of trading. Peace and blessings.